Headline inflation rate dropped by 2.1 percentage points to 18.02% in September 2025 from 20.12% in August, marking the sixth consecutive month of decline since April 2025. Now, this is the first time in 3 years that the nation's inflation rate fell below 20%. The Bureau disclosed this in its Consumer Price Index report for September 2025. According to the Bureau, on a year-on-year basis, the headline inflation rate hits 14.68%, lower than the rate recorded in September 2024, which was 32.7%. This shows that the headline inflation rate year-on-year decreased in September 2025 compared to the same period, the same month in the preceding month of 2024. Food inflation declined by 5.0 percentage points to 16.87% in September, compared to 21.87% in August 2025, as a result of a decline in the average prices of maize, grains, garri, beans, onions, eggs, tomatoes, among others. On a month-on-month basis, the headline inflation rate stood at 0.72%, reflecting the moderation in price increases across key sectors. Now, the report shows that the headline inflation rate year-on-year basis decreased in September 2025 compared to the same month in the preceding year, though with a different base year, November 2029. Well, joining me live in the studio is an investment manager, Mr. Robert Omotunde, for this conversation. Mr. Omotunde, thank you so much for coming into the studio. It's good to have you in as always.
Thank you for having me. My pleasure.
Yes, thank you. Let me ask with what you were projecting for the month of September inflation. We saw that decline, 18.02%. I don't know, what were you expecting? Does it look like what you thought was going to happen?
Well, I think that the National Bureau of Statistics, it's, you will notice that we've not been getting the full report. You know, what I mean by full report is, you know, with the comprehensive data, you know, that enables analysts to do some major projection, especially since the rebasing exercise, right? But then, if you look at the development within the economy, which, you know, borders majorly on, you know, the moderation we are seeing in exchange rates, and of course, so many other macroeconomic developments that seems to be suggestive of some improvement in macroeconomic trend. One would expect that coming into the month of October, that is for September inflation, you know, you will expect some sort of moderation. My projection was not any close to what we saw, you know, in terms of the moderation. I mean, over 2 percentage points difference, I mean, reduction in inflation is phenomenal, you know, and if you go through the historical trend, you know, before the rebasing exercise, you will hardly find that kind of, except there is a major shift in the economy. So what you will attribute it to majorly will still be some of the moderation we are seeing in exchange rate movement, which of course may now be finding its effect in the major economy, right, such that prices are now beginning to reduce. But it must be said that it was such a remarkable reduction in headline inflation. What are
some of these fundamentals? I'm looking at the stability we've had. Of course, we've talked about that times without number. Yep. It's a bit predictable now, if I'm allowed to go that route. About 1,400, 1,450, 1,450, it's less than 1,500 at the moment. So many have said that this is a good one. Our foreign reserves also continue to increase, looking very good. I think it's about $42 billion at the moment. So some say these are some of the reasons why maybe we're having this continuous drop. But I want you to look at this vis-a-vis issue of food prices. How do we put this side by side?
Okay, so I think first you touched on exchange rate.
Yes.
Which has stabilized. I can say almost, you know, for a significant part of the year, you know, we've had that stability, right? You see, and the official window is below 1,500, right? But, you know, if you check track the street market, the parallel market rate, sometimes it touches 1.5. It comes
yeah,
below,
I think sometimes it comes.
As at today,
1480.
Yes, it's trading at 1.5.
What's that today?
Yes, okay. Which is still stable. When you compare to where we were coming from. Right. So now that major development is no doubt impacting on, general price levels. Because when you look at exchange rate, Nigeria's inflation is highly sensitive. Is highly, in fact, you can trace, spikes in inflation to exchange rate depreciation. So that the central bank was able to manage through the reserves and all of the policies that have come in through, exchange rate management to now have this level of stability is good. One of the things that has done is that it has taken speculators out of the market. Sure. Because, if you are a currency speculator, what you are banking on is that if you stockpile the currency today, exchange rate will move such that you can exit and then make some gains.
Some profit.
Yes, but then if you stockpile this time in first quarter, by now you're already at a loss. And if you stockpile...
Sorry to interrupt. Someone told me yesterday that he got FX at about 1617.
Okay.
At that time it was going to about 19.
19, yeah.
And I must tell you, he's biting his finger at the moment.
Yes, he has to. Because again, speculators would not have a field day. Because, we've always analyzed also in this studio that, what makes currency market thrive is also speculation in some sort. Because what has happened now is that investors or speculators, so to speak, who are investors, so more or less in that market, are beginning to see that holding the dollars as against the naira may not be profitable in the long run. So then you see people offloading. Now, demand-supply dynamics will still ultimately play a major role in how currency is priced. So that's what you see. In the event or the periods when we were seeing, a lot of volatility, it was also because if you bought the FX the previous month, when you are exiting now, you are exiting with some 10%, 5% gains. Yeah. So it was lucrative for even the man on the street to take his salary and buy USD, hoping that by the next month, he would have gained some 5, 10%, right? But then when you now study trend, right, for the last perhaps 8 months of the year, you have seen that every time you are seeing currency appreciation, in favor of the naira, then if you stockpile, it's no longer as profitable. Now, it doesn't mean that speculators have left the market. They may just be on the sideline watching. Some of them may just be, okay, let's just release what we have now so that you don't have more losses, right? And some are still holding on, banking on the fact that, on the possibility that, there may still be more depreciation. Let's not forget that 2026 is defining for Nigeria because it's a year before the election. So some of them, in fact, if you hear some currency traders, speculative traders in the currency market, they will tell you that they can't be wrong holding the USD, that they may decide to hold for the longer. But what I think the central bank is doing is to ensure that, if you have this stability, such as we enjoyed between 2017 up until 2020 before COVID, aggravated, we will see a situation where even in the parallel market, exchange rate is even lower compared to what you will find in the official market. We've had that in this recent development that we have seen. But then, when you now, that's on the one hand, when you are looking at it from the currency perspective. But then, from the food angle, right, food prices, are still a bit expensive. Because if you look at, even in this number that we have seen, core inflation is still at 19%. You understand? 19%. So, and core inflation is excluding all the volatile items, volatile food items, which then means that if exclusion of the volatile food items brings inflation to 18%, while core inflation remains at 19%, the major source of this moderation we have also seen is still from food, even though it's still a bit expensive, But of course, the transmission and how long it takes before you now see the full effect. There are some items that are difficult to, for prices to adjust within the economy. Food is not one. of such items. Because as you begin to see, positives coming from, maybe increased supply from the farm, then you now begin to see, moderation in those ones. But then other factors that will affect food prices will be, how much of supply is coming from the farm in itself. Because, we're looking at farm produce and how easily farmers can, produce and then send those produce to the market where to be sold.
Yes.
Now that will still continue to play a major role when you have insecurity, maybe in some parts of the country that are very important to food production. You will still continue to have that pressure because it's not all the problems that monetary policy can solve. Why monetary authority is trying to manage what I would say the demand side of inflationary pressure. The supply side is directly linked to costs. And what do I mean? That is the cost of production, right? And what a farmer will build into his price is how much of effort and how much of spending the farmer has done in producing that particular produce, and then of course the cost of transporting it into the to the market, right? So again, when you look at exchange rates and its implication on things like pump price of petrol, gasoline and the rest, it puts a bit of more stability in terms of prices that are also coming or pressure that are coming from that end, from that end of the market, such that when farm produce, even if you have not enjoyed all the full benefits from, insecurity and the rest, you may get some respite from transportation costs because maybe pump price is a bit now reduced and then you are able to then transport your goods more seamlessly. So those are some of the factors or, the nuances that goes into what to expect. Looking at it from between headline inflation and then core inflation, which shows that headline is much more, improved relative to the core inflation, which is still at 19% levels.
You're taking me to my next question, energy prices.
Yes.
You talked about a bit of decline, and that's what analysts like you've talked about in recent months. Thanks to Dangote refinery,
Absolutely.
Many says that has let supplies been steady and all. But in recent times, we've seen an increase again in the price of PMS. I got fuel this morning, and I can tell you that the rate I bought I filled my tank for like 60-something thousand. I think I would have done that for maybe 50 or maybe less before now. So now that we're having this, electricity prices, energy prices, that's also on one side. Do you think all of this will not impact inflation moving forward and the dirty December spending? I was waiting to ask you that question.
Of course, it will impact on inflation. See, the inflation we're analyzing now was for September.
Yes.
Right. So the reality.
October,
so we have October, November, and December, right? But the reality of what you pictured now in terms of energy prices rising, right? You may see that effect by the October inflation, which will be coming out in November. But I think what is interesting from your perspective is that, we have deregulated that downstream, the distribution segment of our oil and gas, which then means that you would expect that volatility to
always
continue to happen, which is why the MBS will try to exclude the volatile items in computing the headline, inflation as well, which is what we call core inflation. You will see from the numbers we are saying, why you are seeing, headline inflation at about 18.02. Core inflation is still at 19.53%, which is almost 20%. Now, what does that tell us? It means that the volatile items are the major contributor to what we have witnessed in the headline inflation. You see what I mean? So, which means that as we go along, right, we may see that, oscillation between, again, what we are reporting on a month-on-month for headline inflation. But of course, we are not unmindful of the rebasing exercise, which happened, earlier this year, and the effect that we continue to have on the headline inflation, at least till, I think that should be, February or so, when that rebasing exercise was done. So that effect of that base effect will also kick in, or will continue to happen up until next year, when we are going to see, another base year, more or less, taking precedence in terms of how, the headline inflation is computed. But the point here is that we will continue to see that volatility in pump price of petrol. And as we approach December, as you know, is always is a seasonal factor, which we analyze, in fact, you see a situation where a lot of people are even trying to, buy ahead. That is to front load their demand for the December period. Maybe items that people will typically buy within that period. So it is not unlikely that for October, we may see an uptick in headline inflation. Because, of course, as people are also buying, the limited supply that is available, that will also influence prices. But definitely, as we go along into December, the Yuletide period, you are likely going to see, an uptick. Maybe not as, was as we had it last time. Because, of course, there was no, rebasing exercise at that point in time. So because, the base effect is what is defining, if you look at even what IMF has analyzed, the base effect factor is impactful on two key macro variables in Nigeria now. That is the headline inflation and the growth. The
same IMF has come up, World Bank has come up with a review, I think, of the outlook. That's on one side. They also talked about the fallout of these reforms. I'd like you to also react to some of this.
Well, you see, it is clear that some of the reforms that the government has pursued, right, is impacting on the overall, macro variables. Sometimes IMF, I'm sorry to say, speaks with two sides of their mouth.
That's really my problem.
Because at some point...
I saw a skit somewhere, and the person said, IMF says this today, IMF says this tomorrow. So that's
what is expected. It's easier to sit in one place and criticize and say, oh, this is not done right, this is not done right. But then when that is done, you are forgetting that as you're removing subsidy on pump price petrol and you are deregulating the exchange rate market, you are likely going to see the ripple effect on some key variables of the economy. So those are not unexpected. And I do not think that the government was not expecting some of those fallouts, right? The thing then will be, how do we sustain this the momentum of the reforms, so that we do not have a situation where we relapse again? Because Nigeria, we are so good with bringing up policies, and sometimes when you have a new government coming in, the new government can flip the previous policies, good policies that are made by the previous government. So the prayer will be that we continue on this path, because paying subsidy is not good for the economy. Of course, what the populace will now do is to hold the government accountable to see, how the government is also, ensuring that the savings are well utilized to further catalyze growth within the economy. But definitely, these fallouts are not unexpected.
At all. So let's do an outlook now, because, it's always good to have. I'm thinking that the next MPC meeting, which would hold in November, around that table, some of the discussions are what we've talked about here, considering some global developments and all of that. Do you see a very significant shift with regards to MPR for the next meeting?
I think the Monetary Policy Authority has been very clear, right, in that their policy leaning will be based on data. Now, Governor Cardoso had mentioned that he wants to see a single-digit inflation. So he will stop at nothing to achieve that, right? What that means then is that he has to now carefully study the data that are coming out and how to react to them. Because, we just mentioned now, so the last MPC meeting, we had a reduction of 50 basis points. Right? So now, MPR is now sitting at 27%. But then, further action, I believe, will be, carefully, inspecting how some of those latest policies will impact on the economy. Now, it's good to see headline inflation at 18%.
Yeah.
But the central bank will not